Okay, so today for the fundamental update, I'd like to talk about the possible moves at the end of the rate hike cycle. Now, if you remember very well, on the 9th of September, I did give an update. And given the recent developments, there's a growing anticipation that the Federal Reserve may halt its policy of increasing interest rates for the current cycle. So the forthcoming December dot plot will likely provide further clarity to this matter. And back on September the 9th, if you remember, I delve into the expectations surrounding the conclusion of the rate hike cycle. My analysis focused on the potential trajectories of the S&P 500, the US dollar index, and I gave also a stock, and I chose Bank of America as the cycle draws to a close. Now, considering that the current discussions about a pause in the rate hikes, right, we have these discussions, it's an opportune moment to re-examine these indicators to assess whether their ongoing trends align with historical patterns, so you can take advantage of it. Okay, so let's look into the S&P 500 first. In the 9th of September report, you can go back, to their old reports and have a look at that. What I wrote, these are the previous movements for the S&P 500. As the Fed starts its rate hiking cycle, the S&P tend to rise, and just before the end of cycle, it's not uncommon to see the S&P 500 dropping. Rate cuts usually see the S&P 500 move up unless we have a serious economic issue. In this scenario, the market only rises at the end of the rate cut cycle. Okay, so what's happening so far over here? This is the S&P 500 chart. Now, what you can see that the S&P 500 has been on a rise since October 2022. That was the year where the Fed had they started the hiking cycle, and then it grew aggressive as time went on, if you all remember that. Okay, so after the initial retracement, which started in July 2023, right at the top over here, that retracement looks to have ended at the end of October 2023, and S&P rose again from there. So you can see the S&P moving is still very much in an uptrend, and that so this S&P 500 is not expected to break 4611.34, forming the fifth wave of the current uptrend. Okay, so let it do that. Okay, and after price breaks the 4611.34, S&P 500 expected to retrace, and this movement then conforms with the previous cycle. Okay, so whatever was mentioned earlier with regards to the where I mentioned that the Fed starts its rate hiking cycle, then S&P tend to rise, and we have seen that. Okay, so once it breaks over here, then the expectation is for S&P 500 to drop. Okay, so drop, and that is what I mentioned just now earlier on. Okay, so this is my expectation for S&P 500. Okay, so let it drop first, let it finish its bigger retracement. If you want to go up, it will go up more, whatever, whatnot. We'll just wait and see. Okay, now the next one is the US dollar index. On the 9th of September, I wrote this. We see price rise first during the initial hike and come down midway of the rate hike cycle. So it goes up first, then come down midway of the rate hike cycle. So you will see the US dollar index moving up, and then after that, wait, let me just put it up like that so you can see. Okay, later on we'll see. The probability of this occurrence is 30%. Okay, and current movement seems to suggest this movement is pointing towards the 30% movement where it goes up and come down midway. And when a rate cut announcement is made, usually the dollar index will come down. Then we have big swings, swing up, swing down, swing up, happening to form a range before the US dollar index comes down again. Okay, so let's see what's happening so far. Okay, so with this, the first initial rate hike, price rises first. You see 2022, right? That's where the rate hike started, and you can see the price is rising. Now, if you see, if the rate hike also continued into 2023, but come down midway of the rate hike cycle. So you see this thing is coming down already, midway rate hike cycle. So this particular pattern, I only see 30% of the time only. So so what we are expecting right now, okay, when the rate cut announcement is made, usually comes down, then you have big swings. Currently, we are already in a consolidation, and you can see that they are already swinging. It's just only they haven't cut yet. So probably what can actually happen over here is that it has done this movement up here, and then it come down around September already, and this is in a consolidation move. We're expecting it to come down next, to then this conforms it over here, and there is also this possibility. What you do is that it'll come down, and then it'll do more correction for another down again. So it'll come down at when they said we're going to do the rate going to cut rates already. Then after that, you're going to stay in the big swings before coming down further again, forming the 5 movement downside movements inside in a bigger time frame. So this is another possibility that you can look for the dollar index. Okay. Now, finally, is the Bank of America, 9th September. This is what I wrote. Now, we either have price coming down or move sideways the entire duration of the rate hike process. At the moment, the Fed, and the moment the Fed cuts its rate, Bank of America then gradually rises. Okay, this is the habits that I've seen in the past rate hike cycle. So what we are seeing is that we have either price coming down or moving sideways the entire duration, the entire duration of the rate hike process. Now, the rate hiking process started right in 2022, right? Then so we have prices either coming down. So this is what we are seeing, is creating the downtrend. Okay, every time down, move sideways, down, move sideways, down, move sideways. So this is what it's trying to do over here. So what's happening over here, that it has already come down, and the moment they cut rates, it gradually rises. So my expectation, based on the previous movements that I've seen so far, right? Okay, so you have seen so far after creating these lower lows, is that we see this possibly doing 2 ways. Okay, first it goes up right now, right? And then after that, it can do consolidation for some time. So how high it can rise over here, probably can even come up to these levels. Okay, and then when it does this, if you see consolidation movement, that's where you slowly can get in. And even if it makes a new low, even better still, start going in. Because when you are in this particular stock right over here, you also get dividends paid out to you, right? Even if you're trading the CFDs, we do see that, right? So that can give you a very nice return. If it goes to $17 US, $16 US, even better. Those are like places where you just can buy. And if I'm not wrong, I think the dividends you can get is more than 3%. Okay, so it's a good opportunity to buy in those areas if it does. Even if it doesn't, this eventually has the ability to rise from these levels over here. So with every new low that is made, right, look into it. Now, for myself, I have got in the first tranche the moment it made this new low over here, and then it started moving up, right? That was the place where I started collecting my first tranche. I'm not all in entirely, but this is my first tranche of buying already. my average prices is about 26 is my average buying price. So look into that. If it does its correction also, you can go on for it also over here. Okay, so anytime right now in the next 6 to 8 months, expect this thing to gradually rise. Now if you get in, let's say 20, right, all you need is for this guy to come to $40 per stock, and you already made your 100% return over here already. And if it doesn't come here, in the process of coming here, don't forget you're also paid in dividends also. So this particular trade here is a good stock, a good way into looking into trading plus investing at the same time. Okay, so that is the Bank of America to you, and also the end of the fundamental report today. Okay, so just remember all the past reports that I've been giving you all, right? I still keep track of them, what I did, what I said, and what I will do. So especially those long-term trades. Now this is definitely one of them. Yeah. Okay.